Sosi, I don't think you sent me a TCA, so just
hey everybody, we are live. Thank you everybody for joining today. My name is Deanna Haas. I am the SVP of Sold.com. Really excited to have a few special guests with us today. Sold.com has uniquely always been, actually I'll stop for a second and explain what Sold.com is. Sold.com has established two things: a very robust nationwide agent network, as well as a very robust lender network. And so we've been building this since 2018. And traditionally, when we hold webinars like this with amazing guests, we have it exclusive to the agents and lenders that are in our network. We knew that this topic was going to be something that resonated with everybody, and we didn't want to hide it behind the veil or the curtain of just being exclusive to Sold.com. Hopefully, anybody who's not part of our Sold.com network will hear this content, want to be part of our other webinars as well. And so I'll be sharing some links for how everybody can join those networks for free. But today we're going to be talking about how realtors and loan officers can really win big with these NAR settlement changes. And I know that has been a huge question mark ever since these announcements have been made. People are wondering, what am I going to do, right? How can I really make sure that my business doesn't struggle? How do I make sure that I still maybe even do better with these changes? But I have with me Dave Savage. And so if you don't know him, you should get to know him very well. You will be impressed with him after this announcement and webinar. But he is really, I will give my introduction to this. He is really a titan in the mortgage industry. He has always been really thinking in innovative ways to stay ahead of how our industry continues to change. And Dave has really put together this mastermind webinar with some of the two of the biggest people in our industry, both mortgage and real estate. And so Dave, I'm really, really excited to have you with us. Dave, I will allow for you to introduce the guests that you've invited to join you today. But thank you. I will hand the microphone and stage, and I'm going to go in the background, but I will be here.
All right. Well, Deanna, thank you for the nice introduction and for putting this together. I've got two amazing professionals in housing. So again, my name is Dave Savage. I used to be a top loan officer. We're talking decades ago. For the past 15, 20 years, I've been the founder and was the CEO of Mortgage Coach. Now we sold Mortgage Coach in 2021, and now it's Trust Engine. And we're committed to helping lenders, help families make data-driven decisions. So I think we're now in an era in housing where data is more important than ever, and helping people make not just decisions about what's the right mortgage, but make the right decisions around how to build wealth with real estate as fast as possible. So I asked two professionals to join me today. I don't know what the mix of loan officer and realtor is. I would love to know that. And I also would love to, have a lot of interaction. There's a chat feature here. So feel free to let us know what city and state you're in. And also feel free to let us know, are you a mortgage professional? Are you a real estate professional? It'd just be good to have a feel for that. So I'm going to introduce Jason Mitchell first. So Jason Mitchell is America's #1 real estate professional. I really call Jason a real estate entrepreneur. He's got a really unique model in how he does so much volume. If you don't know who Jason Mitchell is, just Google Jason Mitchell. I mean, he's all over social media. He's definitely got some clear opinions on NAR and who's going to win and who's going to lose. Guys, thank you, by the way. We got people from Texas. We got Tampa. We got Richmond. We got a lot of MLOs. So I am seeing a lot of people say they're mortgage professionals. I would love to know if you're a real estate. There's realtor, Texas. So guys, we got the country covered. Jason, before we bring Sosi on, anything you want to say to position who you are in the industry for anyone who doesn't know you?
First, I want to say hi to Deanna. I haven't seen her in a while, so thanks for having me. And I want to apologize for the way my video looks. I'm actually here in Hawaii right now, so I'm not back at our office to have Dave's beautiful screen footage that he puts together every single day. So I apologize for that, everybody. But I am here. And just a background. My name is Jason Mitchell. I'm the founder of JMG. JMG is the #1 real estate team in the country. We'll do about $5.5 billion this year in sales, about probably 12,000 transactions. Very unique model. We work with organizations and businesses. So from search and lending partners alike, our group this year will manage about $40 billion in referral volume. And so what we do is with those referrals is we disperse those to our agents across the country. We have about 850 of those, and in service on an organizational company level. So those lenders that want to enhance their capture ratio on lending, getting to a trusted agent is critically important. And that's one of the things we'll talk about today is now with the changing NAR environment, how important is it that you have your trusted agents in your arsenal, because that buyer broker agreement is going to be a big indicator moving forward on who's serious and who's not. And loan officers and realtors need to be more connected than ever once this comes out in August. So happy to be here, and thank you guys for taking the time.
And for those of you that use those reaction buttons at the bottom, we love them, and they make for a more interactive conversation. So when you hear a takeaway, feel free to use those reactions and put questions in chat. I want to make this as interactive as a mastermind as possible. So I'd love to bring on Sosi Avila. He's based out of Orange County. He's one of America's top mortgage professionals, and he's one of America's top mortgage advisors. The way he helps families make decisions around the mortgage is more valuable to the consumer, and he also does it in a way that I think is more valuable to real estate agents. And we'll showcase that throughout the call. Sosi, anything you want to say to introduce yourself and position yourself before we get into the topics at hand?
Yeah, absolutely. Well, thank you as well for having me. So honored to be here on this virtual stage. I'm really, really stoked to be able to insert some information, some point of references that hopefully just energize everyone, because the market that we're in right now is a market that has so much opportunity. I know the way I started off the year, I was like, okay, am I just trying to, psych myself out? Is there really opportunity? But I'm leading a group here of a small group of LOs. We've done about 147 million in purchase transactions from January to the end of last month. 30 million of that was my own personal production. We love being able to help people think through creating wealth through real estate in a modern and helpful way. And so I lead an organization that does a lot of social media components, a lot of direct to consumer stuff. And so we do direct to consumer, B2B, and again, overall, just help people from a modern and helpful way with really good mortgage advice.
So you called out two things that I want to pull out real quick. So you mentioned that you do a lot of social media, and that's an understatement, guys. Sosi and his partner and team are probably the top social media lender in the country. So you're going to want to follow him. And then I also hope you noticed he used the word wealth with real estate multiple times. And that is something for all the real estate agents throughout this conversation. We're going to talk about how do you create more value for the consumer? How do you communicate that value earlier in the process? And not only do you need to be a local market expert, not only do you need to be a great negotiator, but to be able to talk to consumers and visualize how you help them create wealth with real estate. It's a value prop. So real quick, where do they follow you on social? And just give us a minute on that, and then we'll hit the topics.
Yeah, you can follow my personal page. It's Mortgages with Sosi. The T is silent for those of you guys who don't know. And then also my partner, Min Win at What's a Mortgage. Overall, our lead machine has done about 1,000 leads a month. We're ramping up ad spend, so we're excited to see what those numbers are going to end up here in the next 60 days. Follow us there, comment, ask questions, join the newsletters, anything we can do to just continue to add value to you in the community.
And how many followers does What's a Mortgage have on Instagram?
A little over 300,000.
Yeah. How many mortgage professionals do you know that have that type of following and that type of value in the market? So check it out. So Jason, let's get right into it. I'm going to start with just how big a deal from your perspective is this NAR settlement, and any just advice to mortgage and real estate professionals around it. And then I'll come to you with the same question, Sosi.
I have a lot of opinions around what happened. I'm going to start with, what's the best way to explain this from a sales perspective? It's something is always easier to understand when it's been said the second time. And so what I mean by that is our new milestones as LOs, this is purchase. LOs and real estate professionals, new milestone is buyer broker agreement executed. That is the milestone that separates the serious buyers from more of the looky-loos moving forward. And why that's important, and why saying something the second time becomes easier psychologically to understand is that if you are first to the consumer, meaning that the realtor didn't send you the consumer as a loan officer, that you got to the consumer first, which happens in many cases, the more that you touch on the fact that, because clearly you want to connect them to a trusted real estate partner when you're taking an app. Because if you don't, if that client goes and finds their own agent, they're going to say, you should talk to my own local guy. You guys want to make sure that you have agents in every part of the country you're doing business in that you can refer with confidence. Because what happens is that agent is going to help protect you and they're going to do a great job for your client. But the saying it second is on the real estate side of things. Because before you make that connection, it's important to just scratch the surface with, hey, look, I work with Jason Mitchell. He's a great agent in Scottsdale, Arizona. I think you're going to have a great experience with him. He'll have a buyer broker agreement. This just simply allows him to show you homes. So once he sends that to you and you sign it, you can go view any homes you want and then end it. Very surface, but that discussion of it's coming makes it easier for the agent that you're sending that business to get that buyer or broker agreement signed, because the consumer is going to say, oh yeah, that's right. So she said that earlier on the phone. Like, it makes the discussion easier instead of us bringing up the first time, because it may throw them back. If a third party brings up the way it is, it's easier for the agent to get that document signed. And getting that document signed is now the new critical milestone when you talk about loan officer and purchase and agent and purchase, because those are the serious buyers that we need to have a lot of follow-up cadence to. So teeing up what the process is going to be like in the field for that real estate professional as a loan officer is now more important than ever.
So we just had a question from Richard that, Sosi, I'm going to have you answer the same question, but I do want to come back around after that and define trusted agent and literally have each one of us do it in like a minute or less. Just like give the audience, like, Jason Mitchell, what are the 5 ingredients of a trusted agent? So stay tuned on that, Richard. We will nail that within 5 minutes. Sosi, how big a deal is this, and what are any advice you want to layer into that?
Yeah, I think it's a huge deal. And to Jason's point, right, this is going to be something that creates change and then demands change from everyone else around it who's going to go with that tide well. And so there's obviously some cleanup that's going to be happening, right? When you're on social media, you see people's opinions of cleanup. Oh my gosh, we needed a clean house. Others who are just like, I did deserve this, right? There's this aspect of things are happening outside of my control that are going to personally impact me now, and it's unfair. And so there is that aspect where this is going to feel unfair for many. Yet at the same time, I remember reading this Forbes article when I was earlier on in my entrepreneurship career, and it talked about the number one characteristic of any successful entrepreneur is not their ability to speak, is not their discipline, it's not their talent, it's the ability they have to improvise. And so when the world changes out of your control, professionals like us can improvise and find new opportunities. That's why I love hearing Jason go straight into, now let's talk about the need. Now, what do we need to do to be able to make sure we set the stage correctly for the client to still have a good experience and everyone have a win-win. So I do believe it's going to cause a lot, both one aspect negative for some and another aspect very opportunistic for those who are willing to actually ride this wave and improvise correctly.
I tell you what, it is not negative. When I first heard the news, I was actually in Cabo, and it ruined my trip because I couldn't get off the phone. And I'm sitting there saying, like, oh my God, what are we going to do? And as time has progressed, if you've noticed, guys, banks make money lending money. It's already hard enough to buy a home. They have already come up with new guidelines, twisting the rules per se when you come to VA, FHA is coming, conventional guideline changes, because they know that buyers are not going to want to pay out of pocket for their representation. And those that are not, or those that may have to, and this is why it's, when I say trusted agent, Richard, this is what I'm talking about. Where what happened with NAR and where it got screwed up was this. One, they were arrogant. Two, it's the non-disclosure of cooperative compensation and how that kills the buyer experience from the very beginning by not knowing. Not because of steering or agents getting paid, because the consumer needs to know in advance if they're going to have to come out of pocket or not. And in order now to make that happen, a phone call has to be made. So what's important is the transparency that when you connect to a trusted agent, that they're having upfront discussions about transparency. And if a home is not offering cooperative compensation, I will let you know up front before we see the home, so you can do homes right for you or not. And the reason that is because this is what I believe is going to happen. In most cases, a home that is not offering cooperative compensation for most buyers out there would be the same thing if Mr. and Mrs. Savage were buying a single level home and they said a 2-story, we don't even want to see it. I equate this to the same filtering, because most buyers will say, if it's not paying for your service through the contract, I don't even want to see the home. So when we have upfront transparent conversations, that I'll let you know, because if you do it later, if you do it while they're in the home and they fall in love with that home, you're in trouble. So you need to because they may not have the money or they may not want to pay out of pocket. And then what are you going to do? So having upfront discussions that prior to going to see a home, I will find out if my services will be paid for within the contract. If it is, great. If it's not, I'll let you know up front, and you can decide if you want to go see that home knowing that you may have to come out of pocket for services. We are entering a world where residential real estate becomes commercial real estate when you talk contract negotiations. And I don't mean to kind of like take up the time here, but a quick example of that is this. I have a commercial building in Scottsdale that I leased out to a new company, and it's an expensive lease. So it's a 7-year lease. It's $8 million for the lease. When I got, and this is why I say I don't think commissions get interrupted, and if they do, it's going to be very limited. When I got the terms and conditions, the TIs, the tenant improvements, the rent abatement, the cost for the rent, meaning price per square foot, all these things that were collectively given to me. You know what I countered? The same thing that a seller is going to counter in the residential space. I didn't counter commissions. I countered price. And so I don't think it gets interrupted, because if it's all going to be about what is the final price of the home, what is my net? So even having the discussion with a co-broking agent to say, what are you offering for compensation? Their response is going to be, well, it depends on what your offer is. If you're offering me $500, I can pay you $3. If you're offering me $490, I can pay you $2. So really this comes down to what is the whole entire package of the deal. And that's why I believe getting a signed representation agreement, so we don't get bifurcated by going to a builder on the weekend, or because we're not available and calling the next best agent on Google. I think we're going to have more tightness with our consumers. But honestly, I don't think our commissions are going to be affected that much. I truly don't.
Okay, so real quick. So I mean, this is a big deal. When you interview top people, and there's thought that there could be 20 to 40% less agents a year from now. I don't know whether that will be the case or not, but I know a lot of very smart leaders in the real estate industry that thinks it will. That's a big deal. When there is a change in how everyone needs to update their value prop, it's a big deal. And there's going to be winners and losers. And the name of this, event that y'all showed up to is how can realtors and loan officers win big with these NAR settlement changes. So we're going to spend the rest of the call just like throwing darts at how to win big. I do really quick want to give a couple thoughts on what to me a trusted agent is going forward. And Jason used the word a bunch of times, transparency. Guys, transparency equals value. I mean, when you look at solutions like Uber that's changed an industry, it was because of transparency. They took something, getting a cab, even getting a cab was not a transparent process. How much you paid them, and did you pay them the right amount to get there was not a transparent experience. All of a sudden, you knew where they were, you knew when you were going to get in that car, and you knew how they got you there, how efficient it was, and you knew what you paid them. It was transparency. And so transparency is, going to be a trait of the trusted advisor going forward. Going beyond the transaction. And Sosi said the word building wealth with real estate, and showing people visually how you help them build wealth with real estate is going to be part of how you are a trusted advisor. And by the way, Holly, noted, fair enough. It does make a good case for how an app and a technology created value with transparency, but fair enough on that. And then I think beyond the transaction, how can we go beyond the transaction? So Sosi, any quick bullets you want to put around trusted advisor? And then let's all come, Jason, be ready to come with your advice to buyer's agents. Like, what is your best advice? And Sosi, then I'll come back around to you with your best advice to lenders. Trusted
Yeah,
advisor.
the best advice I can give to any advisor, right? And this is coming from, if you guys don't know my history, I used to be a pastor beforehand. So when I was in Bible school learning counseling, I remember one of my professors looked at the classroom and said, if you think that you can give somebody the right life-changing advice after an hour of sitting with them and not knowing the intricacies of what their history is, not knowing the intricacies of what their current impacts could be upon ABC decision, realize that you're going to approach counseling all wrong. Your job is to listen, give information, and let adults make their own decision. And that was the seed for me to just grow as somebody who wants to be an actual consultant and advisor in my practice and in the mortgage loans that I get to help clients through. And so the biggest advice I would give is, as we continue to have different hurdles thrown at us, as we continue to have different things we have to pivot, leading by perspective is so important. Right? Like, think about all of us, right? We went from, oh my gosh, what's going to happen? And then you start doing more research and you start thinking about it more and you go, I'm excited now because your perspective changed. So every client you get that is either, fearful because they heard they have to sign this thing that Jason was telling them to sign, and then they come to you to get pre-approved and they're like, well, what do you do there? You give them perspective. Every client that's trying to do more research more than ever before because the millennial buyer does not trust the professional, no matter what kind of accolades you had, realize that there's a different generational type of service to the consumer. The previous generation said, show me your accolades, prove to me you're a professional, then take my hand, do whatever you want. And guess what? Our parents lost their houses for doing that. So millennials don't care about that anymore. Do you know as much as Google? And so the ability to lead by perspective and have a high real estate mortgage IQ so you can consult is going to be the most imperative tool that any craftsman can have in this industry we're moving forward with.
Real quick too, the LO's got a guide. You guys are the ones that know the terms and conditions from underwriting. You guys have to guide. That's why, look, I've said this a million times. Dave knows my feelings on this. The loan officers are the best of the transaction. They are the best of the best. And no offense to real estate agents on this call, but the loan officers have the hardest job. And they also need to be the captain of the ship because they're the one that dictates how underwriting looks at a file. And in order to do that, you have to be able to give good advice to real estate agents out there, but you also have to give advice to agents that are going to follow your lead and not think that they know it all, because they don't. And unfortunately, in our business, a lot of times LOs and realtors get combative. Can't have it. Can't have it. We need to understand that we're working together, but most importantly, that the loan officer is the one that's driving the ship in the transaction, because the way the underwriting is going to look at the way that we're verbalizing commissions and other things within the contract has never been more important.
So I do want to just shout out to everyone who's putting comments in chat. Appreciate that. It's great feedback. Everybody that keeps clicking that heart button, keep it up. We like that. It keeps us interactive. So Sosi, what is your best advice? And give it to both realtors and loan officers. And then Jason, I'm going to come back at you on that one. And by the way, Andrew just said you nailed that one, Jason. So FYI.
Best advice in regards to this new change, best advice with real estate management.
The headline, it's how can loan officers and realtors win big with these NAR settlement changes? Like, what is your best advice to both realtors and loan officers?
Best advice right now is find your people, right? To Jason's point, right? If you're a loan officer and your realtors don't understand, if your loan officer identify with these two things, does your realtor have the ability to be coached up if they're not where they need to be? And are they where they need to be able to have a really good partnership with you? Or are they in a position where they're going to be stubborn? They're not going to be worth the time and energy. And you need to move on to people who are your people, right? Families right now need to be served more than ever before. And they need the right advice. And if you're a loan officer who's going, that's me, I want to provide that. I have a system, tools, products, everything I need to be able to deliver that for the consumer is there. Find realtors who are cut from the same cloth, operate from the same conviction, have the same mission in their real estate practice, and then grow each other. And identify those that aren't worthy of your energy or talent, and cut them off and move on to the next. I know that sounds really, really harsh, but right now is wartime, and there's not enough time to keep being a charity. It's time for you to have a really good operating mortgage practice that moves forward, and you do it in a way that's going to impact families the most.
Yeah. And Alfred, roger that. Not all realtors contribute to the problem. Keep the feedback coming. And I want you guys to write down something real quick. Write down captain of the wealth team. Most real estate agents and buyers agents, they differentiate by, I'm a market expert, I have great negotiation skills. They don't really talk about, I help families build wealth with real estate. And they, by the way, they don't have mortgage professionals that within the pre-qual process show a family how, hey, not only to get pre-qualified, but how does this impact your wealth over time? And so for every mortgage professional, you need to be a captain of the wealth team, and obviously be able to close loan on time, keep your commitments, solve problems, communicate well with the agent and all the other parties. But you need to show people how to build wealth with real estate. Any comments on that, Jason? Any opinions you have there?
I think it's, I'll tell you, I think that the best professionals I've ever worked with are the ones that just put ego aside. The ones that just, this isn't about us, this is about our client, and working very closely together. I think that because a lot of consumers, though, too, are not necessarily buying in local markets. Now more than ever, consumers are moving because they can work virtually. They're going to other places. They're leaving big cities. And for the loan officers that don't have agents in these cities where their clients are moving to, I'm telling you, you have to have that. Because if you're sitting in Orange County like Dave, and Dave's moving to Austin, Texas, and you're writing his loan, and you don't know an agent in Austin, Texas, and Dave finds his own agent, you will be in jeopardy of losing that deal. Because when that agent starts working with Dave, you're at least going to be shopped. I can tell you that. And so it is important that you guys find trusted agents across the country. Now, I can plug JMG here because that's what we do. But the reality is, outside of JMG, my company, the reality is you do need a network. You got to have a network of trusted professionals, because you got to connect your client when it comes to the purchase side and being first. Now, if the agent brings you that opportunity, meaning the realtor brings you that opportunity, it's a situation where it should be easier in terms of the transaction, because hopefully that agent had that discussion up front. I'm talking in the cases where, like if you take Soshi's side, they get a lot of leads in, scrubbing those leads, getting a good client, setting the process up for success, and making sure you're connecting them to a trusted partner.
Roger, all that. Keep the feedback coming. And Mark, he said, I'm your man in Austin, Texas. Roger that, Mark. Hey, Sosi, I mean, you're a mortgage coach, and you truly are giving a high level.
What gave that away? The shirt?
Yeah, right. Yeah. By the way, thanks for representing. But what does a mortgage coach do, when it comes to helping consumers, with transparency, and any specific strategies you want to call out in today's call? And if you want to share your desktop, feel free. But tell everybody what the difference is between a loan officer and a data-driven mortgage advisor like you.
So the best illustration I can use to kind of explain what a true advisor does, especially when he utilizes a mortgage coach, uses different points of reference to give better perspective so that clients can make better decisions, comes from My Big Fat Greek Wedding. Not My Big Fat Greek Wedding. I'm not Greek, I'm a Latino, but the movie. And it was when the mom was giving counsel to her daughter saying, look, the husband is the head, but the wife is the neck, moving him wherever she pleases. That is the best illustration I've been able to think of for any type of consultant who truly has an other-centric mindset for the consumer. True advisors are helping the consumer make their own independent decision by providing for them data and information that is just not out there, right? Google confuses it, and it's just not clear enough to make a really good financial future decision. So yeah, I'll share my screen, and the first thing I'll go into is a commission example. And then the second one, if Dave, you'd let me, I'll go into, sold.com, what selling examples look like and why it makes sense for people to make moves sooner rather than later, even if they have like a low interest rate. So that would be the two that I'll share. And so before I do it, I will give this out for all the realtors. What I've been told by my realtor partners verbatim is, Sosi, I can't convert the client as well as you can. And so one of the things that people even test our value with, so if you're a mortgage coach, tell your agents, test my value. You want to see my value? Send me a listing or a buyer who's on the fence and can't make the decision, and I'll take them the rest of the way, or at least have the highest probability of taking them the rest of the way. So with that said, hopefully I provoked some of y'all to some curiosity. Let me share my screen.
And for all, the realtors on this, I want you to think about most loan officers give a fee worksheet. Here's your rate. Here's your payment. Here's your cash to close. It's not showing options. And anyways, I'll call out where this is showing an uncommon level of transparency and value that I think every realtor wants their loan officer to do.
This is going to be an example of someone who's trying to buy a house that's listed and they're not having cooperative commissions, right? And I'm trying to use a low down payment example. All the objections I'm trying to summarize in this one scenario. So $800,000 purchase price. When I made this was back in April. Their payment would have been $6,359, and they would have been about $57,000 out of pocket. And so if they're not offering commission and there's $20,000 of commission expected of the buyer's agent, what do? Well, absolutely. Jason shared it correctly. You always get what you set up. So if you don't set up the consumer to know this house is one that you'd have to pay for my commission out of pocket, and they don't want to avoid it, but they want to buy the house, right? What are your options, right? So if there's $20,000 commission need to be paid, it can be put into the purchase price, right? So $820, the monthly payment goes up $6,518, $58,000 out of pocket. So the question now is your realtor worth that payment difference every single month? Was the protection of somebody who can negotiate better on your behalf? Was the protection of having somebody know what they're doing better on your behalf, teaching you what you didn't need to know, guiding you through a legal contract, and making sure you get the best terms? Is that worth it, right? I would say and advocate, yes, absolutely. And so then the next objection usually comes going, well, Sosi, what if it doesn't appraise at $800,000? Well, if it doesn't appraise, this is a low down payment option already. So the appraisal gap strategy doesn't work all the way with this. The more down payment you have, the easier options there are. There are options literally. If you're putting 10% down and the house doesn't appraise for 5% less, you can still come out of pocket nothing. It's really, really great. Watch the rest of Dave's videos on his YouTube for any of those appraisal gap strategies. But the best we could do with FHA is it would then be $64,068 a month, and they'd be bringing out $65,000. So you think oh my gosh, there's no options. If the commissions have to be financed in and it doesn't appraise, my borrower is still going to be coming out of pocket, another $8,000. And this is a first-time home buyer. They don't have another $8,000. Great. There's more options though. In this scenario, what I did is I lowered the down payment, which changed the monthly payment. And then I even gave a higher interest rate so they can have lender credit. And now look at that. If the house didn't appraise and they needed to go worst case scenario finance all the closing or the buyer's agent commissions, and they didn't have any more money out of pocket, do they still have a viable option? They do. Do they want the home enough? And so my goal in this presentation, first and foremost, is just show there's still other ways if somebody truly wants this house to work and if they need this house to work. So that's the first presentation.
Cool. I love the options. And remember, guys, it's all about options tailored to the family's situation. And it's going to vary from market to market, but be able to give people options is the takeaway here. Okay, what else you got?
Then from there, this is the big one that I love for the sold concept, right? How do we get more listings? So think about the trillions of dollars that Americans are in debt right now. It's insane, right? The average consumer is being crushed with their credit card debt. And then you have these pay now or buy now, pay later things that have just fallen through the cracks of the ability to repay acts. And even with those, most people have already had one late payment on these short-term type of loans that aren't even showing up on most consumer reporting. So there's a lot of debt in America right now, right? And so with all this debt, I'm speaking to consumers every single day who have a low interest rate, right? In this scenario, this is somebody who had a $730,000 condo. They bought it at $730,000. and they're looking at doing a refi. The value is now $860. Their current monthly payment is $4,267. If they needed to pull out $114,000, their payment's now $6,087 with cash out refi rates. So what could be an option for these guys, right? What could that all look like? Well, with that being said, let's kind of explore something. Let's explore the fact that if they didn't want to do the refi and they were like, man, that payment's going to be super high, I don't know if I want to move forward with the next purchase, whatever the scenario is, right? Being able to listen to your consumers, to your customers, to the people you're trying to help is so important, right? Every refinance that I do, I'm always asking them, what is your long-term goal? Do we think we're going to be in this house for a long period of time? If the answer is no, then we should look at selling and buying instead of just refinancing. So even if they aren't even looking at a cash out refi and you're not trying to do that perspective, do know that that should always be your knee-jerk reaction, because the number one regret I speak with people about, or that they share they have with me who refinanced back in 2021, 22, the number one regret, did it stop sharing?
Yeah, you just stopped.
Oh, I don't know why it did that. Let me reshare that. The number one regret I see people tell me they have is that they didn't sell and buy their new house and they refinanced. That's legitimately the biggest regret I get from people telling me all the time, because they're like, man, if I would have just sold and bought the house I wanted, I would have had the house I wanted with the 2.75 rate. And now I'm stuck with this. So long story short, giving people perspective. If you're in a house that's worth $860 now and you're looking at selling and buying, you're probably going to pocket around $200,000. And for a lot of the consumers in my area, that means they're moving from this condo to a $1.25 million starter house, because now you don't just move from your first house to the dream house. You go from a starter house to an interim house and then your dream house, with the way prices have just increased since COVID. So these people, they'd be looking at a payment of $5,000 more a month using all their equity. And a lot of these people, surprisingly even to me, they qualify for it. They can buy, but they just don't want to because the sticker shock's too high. So what do? I'm not here to make anyone do anything, but show them their alternative future. Because sadly, I've had so many people come to me in the last 6 months saying, shoot, Sosi, I wish when we spoke a year ago and we didn't decide to buy, you would have told me it could have gotten this bad. So I don't want that kind of regret anymore. So I'm showing people, okay, let's say you wait 5 years and it goes up to 1.5 and rates came down to 6.5. What will be your payment? $86.96. And they're always like, even if I put $250,000 more, I'm like, yeah. Right. And so they look at this and go, man, I guess I'll do that because it's worth just waiting for that $300. And I go, okay, now that we see that the future's not as rosy colored as you think it might be, and now you're seeing what the realities could be if things went this way, which I think those are all conservative projections. Let's say you would have actually just refinanced this property after buying it. So if you would have bought and then refied, even at that same lower rate, look at your payment, $82.26. So the question is, Mr. and Mrs. Savage, for the dream house that you said you are going to have to buy, for the house that you said you can only live in for 5 more years because your kids are outgrowing their rooms, for that house that you've shared with me is going to have to be a new payment one way or another. You've already told me you're going to have to get a new payment, whether it's going to be a new payment for a cash out refi, whether it's going to be a payment for a house you wait for 5 years. Let me ask you this. Would you like your new house payment to start at $89.37 and have a high probability of coming down to $82.26? Or would you like to roll the dice and have a house that you're going to live in for 20 years at $86.96 no matter what?
And scroll down to the net worth real quick. And guys, this is what you need to work with a loan officer that could show the net worth impact, buy now or wait. Anyways, let me share my screen and then let's get Jason back in the hunt here. Because it's stop sharing your screen, Sos.
Yes, sir.
And actually, I think it's this one. Or no, it's this one, guys. Every time a loan officer gives a pre-qual, when it makes sense and it's tailored, they should show, hey, what in this particular case, it's a rent versus own, renting versus owning. And in this far right one, it was showing a person the power of house hacking. What if you bought that 3-bedroom house and got paid $600 a room and invested it? Just that's my biggest takeaway for all the real estate professionals. Make sure you're working with a mortgage professional that can obviously deliver a great mortgage transaction but could show different strategies to build net worth faster. So Jason, I have a question for you around how managing the pipeline is going to change. But before I do that, any comments to what Sosi shared before you kind of share your thoughts on how pipeline management might shift going forward?
On our side, it's kind of how we look at success when you have an actual buyer's consultation instead of just, I'll meet you at the first house you want to go see. I think really laying the ground game becomes important because you get to learn their goals and what their needs are in an open form discussion for an hour or two over coffee or over breakfast. But we always find that we have far more success when we actually sit down and have a consultation with the client and then go show them homes rather than just going to show them homes right away. I'm not saying it can't work by doing that, but we find a lot more success when we actually sit down with our client and have a full-blown consultation, and that's what this is.
Cool. And by the way, the person who asked, that was Mortgage Coach. You could go to trustengine.com. Actually, the best website is trustengine.com/10x. For all you mortgage professionals, not only is there a link to sign up, but there's also a lot of training content. And Sosi's Mortgage Coach reports, there's links to those in chat. And I'm putting a copy of that total cost analysis. It's a rep versus own. So Jason, I know when you and I were prepping on this, you were talking about how pipeline management was going to change and really focus on managed contracts. Could you share your thoughts on that?
Yeah, I just go back to the milestone of buyer broker agreement executed is going to let you know who the real consumers are in your pipeline a lot of times. And that typically wasn't a milestone. Like the typical milestones were new, made, attempted 1, 2, 3, 4, 5, then showing, then under contract, then closed, canceled, nurture. Those are the milestones on the buy side. That new milestone, that's the most important one, is buyer broker agreement executed. And I think it's important that, again, this goes back to working together collectively as LO and agent. When that milestone is achieved, the loan officer should know that too, because now you have somebody else following up. So the more that we're collectively following up as a team, the more deals we're going to do. But that status, buyer broker agreement executed, is the new critical milestone when you talk about the funnel for buy side.
Got it. And by the way, Holly, those weren't slides. Those are interactive experiences, and the links are in chat on that. So let's go to a closing question with both of you. Please put your questions in chat. We're going to try to get some questions at the very, very end of this and drive that. But Sosi, what do you think are some of the best strategies to get to the home buyer first? I mean, that's something that we could do a whole webinar on how you're doing that. And then Jason, I'm going to give you the same question if you could hit that real quick.
Yeah, more than ever, it seems like this current world of consumers and customers are research centric. And so there's a couple things that we've seen be super, super successful. Number one, being able to provide value-based content. This doesn't mean that you go on there and say who you are, what you've done, call me, and you just have commission breath coming through your digital screen, right? Especially social media. You are interrupting somebody's moment typically because you're showing up on their feed. You have to be worth the interruption with value that gives, not trying to just take. So social media, value-based content is number one. Two would be events. Like we have first-time homebuyer events, first-time investor events, first-time home seller events, divorce and your home events that we do regularly. And when you do these direct consumer events, there's a lot of great success you can have for that. And then you can even pivot those direct consumer events from the community. You could pivot it to a realtor, right? I've done a lot of these with realtors. The last one I did, it was a VIP realtor event on owning a home and what you need to know as far as investment properties. And so we invited 16 people, hand selected 8 couples out of their past client database that had a high probability of selling because they had high equity, low loan amounts, and their family was growing. And out of that meeting, which took a 45-minute presentation, VIP Saturday morning breakfast type of meeting, they got 4 listings within a week and a half. And so you can leverage these direct consumer type of events, not just as webinars, not just as realtor events, but then you can even take it into corporate partnerships. We just did a presentation for one of the tribal communities up north where we came and taught their members about investment properties as well, given the fact that they have profit share from the different Indian reserves that or options that they have. So there's been really, really great ways of getting to the consumer and being able to go out there. And the reality is people are wanting info. You just got to give it to them.
And,
Yeah, I want to comment on that real quick. So everyone wants to do the fun work, which is I want to work on deals. That's getting somebody in contract on a new home. It's working on a good refi, getting docs back. That's fun stuff. What Sosi's talking about is the busy work. And that's the problem, is a lot of people don't want to do the busy work. But the busy work is what leads to the good work. The busy work is the stuff when you wake up every day and filling your calendar with stuff to do, but it's not consumer facing. It's not showing houses. It's not going to listing appointments. These are the days when you're like, a lot of agents wake up and they say, well, shit, I got to walk through at 9 a.m. and then I guess I'll just go to the gym. I don't got a lot going on today. That's where you need to be busy. The busy work is where you win in our business on both sides, from the LO to the agent. It's making sure that you are busy, that your calendar's full, that you're working on your mailers, your newsletters, working on your social, working on doing events for past clients and future prospects. That's the busy work, because when we talk about doing these things, a lot of people roll their eyes and they're like, yeah, that sounds great, but am I really going to do that? And the reality is if you don't, someone will, because they're willing to do the busy work. If you're not doing the busy work, none of the good stuff comes. The busy work is the stuff that people don't want to do, but that separates the great from the good. You've got to find ways to be busy. You've got to be busy to get the reward. It's the hard work.
Yeah, no doubt. So here's a thought. I also want to better write down speed to need. I think speed to need is more important than speed to lead. Obviously, getting to the lead and having the conversation is important, but getting to the need is more important. And by the way, speed to need also means you got to the customer first. So you crushed speed to lead, and now you're getting to the need of that consumer. And here's the deal. Consumers are like, should I list now and buy? Should I buy before I sell? Can I buy before I sell? For all you mortgage professionals, Sosi was a great example of a mortgage advisor that will listen to a consumer and come up with creative ways that help that consumer. Should I list? Should I buy before I sell? Should I wait? Again, trusted advisor, they're data driven. They get to the speed of the need the fastest with the consumer. And so just keep that in mind. I do want to bring our guest, and Deanna, I don't know where you are, but if you could jump back on the screen. I want to make sure you all know how Sold.com can help you win during these NAR settlement changes. And she's got some ideas. So we want to give you a briefing on that. Keep questions coming, because I think we might have a few minutes at the end to nail any questions that come up. But Deanna, will you help them know how Sold.com can help them win with all these changes in play?
Yeah, definitely. And I think, as both Sosi and Jason, and hi, Jason, nice to see you again, have talked about, is just really the importance of having this great partnership, right? I think you have to make sure that both partnerships are strong. I think a lot of people have established relationships that maybe it's just the guy you've always used, guy or girl that you've always used, right? And it's just kind of the way that you've worked. I think everyone's going to have to just really make sure that they're giving a whole full service experience that allows for, when they're working with a client, that their lender is amazing and that agent is amazing. Because how many times have you walked away from a transaction where they were like, oh, my agent was great, but the lender kind of screwed this up for me, right? Or vice versa. They're like, thanks, Sosi, for recommending me to that guy, but he kind of didn't really call me very many times. So it's so important as these changes are happening that you guys really create this full service top tier experience beyond just what your little siloed job is to do. And so where Sold.com kind of comes into play is, I mentioned earlier that we've established a network, and that's kind of what we've been known for is having a network of real estate agents. And I have some slides that I'll bring up that kind of at least give some visuals to it. Bear with me 1 second so I can share that. All right. So we've established a network or a marketplace that is consumer facing. We are generating about 35,000 into our, what I call the sold.com ecosystem every single month. So we have quite a bit of traffic, but the domain name of sold.com doesn't hurt. But we have lots of different things that people can come to us for. They can come to us for real estate services, home improvement, insurance services. And so what we really want to establish is this one-stop shop for consumers to come to for all of their homeownership needs and maybe even sometimes their rental needs. But you might be wondering, like, why do I care about a renter? Because hopefully one day that renter does want to buy a house, right? They're going to need to have the services of a real estate agent or a mortgage professional. And so one of the newer things that we introduced, and newer meaning that we launched our agent network in 2018. We launched our lender network in early 2023. And so now what we did was we kind of did two different things. When we originally launched connecting consumers with lenders, was we went straight to companies and we said, let's connect you with ABC Mortgage Company. The problem was the consumers didn't resonate with that. They resonate with Sosi. They resonate with his face, his personality, what he does for the consumer. And so we had to pivot quickly and understand that it didn't really attach very well when we just said, Joe Smith, I want to have you be introduced to ABC brokerage or mortgage company. So now we got more of a personal touch and play. And now we have our concierge, our consumers actually connecting with the lenders that are in our network on a one-on-one basis. We are speaking to that consumer as they come to our site. There's 35,000 consumers. And then we are connecting them with what their goals are, where they are in that transaction. And so we have now both the agent and the lender. And so the reason why all of you guys are on this call, we have both lenders and we have agents on here, is because you guys care about your business, right? You care, you want to invest in it. You know that there are things changing and you want to make sure that you stay ahead of it and that you are always at the front end of what you guys need to do. Does it hurt? Yeah, Jason said it himself, right? It hurt when he got this news that this is going to happen. Like, what the F is everybody going to do when this happens? You let it digest. And then most people came on the other side and looked at it as, okay, I've just got to adapt and change, right? You can still sit there and complain about it. And it doesn't mean you can't still complain. I'm sure Jason still complains about it every once in a while, but it is what it is. And now it's just time to adapt, change, move forward, and know that no matter what gets thrown your way, you can do it. This isn't the first and it won't be the last change that we see in our industry. With that being said, like I mentioned, sold.com, this is probably more catered towards the LOs on this call, is sold.com has built a network of 75,000 agents nationwide. And what our goal is not only doing what every other lead generation company does, which is connect LOs with consumers that are coming to the site and saying, I want a pre-approval. We have taken it one step further and made it an agent matchmaking tool as well. So every time we connect a consumer with an agent, we are also going to be introducing you as the loan officer to that consumer, which is pretty traditional, but also making an introduction to an agent. So for the agents on this call that are in our network already, you guys should be looking out for this, because if you guys don't already have this all-star lender, or maybe you do have a lender you've been sending your business to and you're just like, I don't know, they're kind of okay. This is the time to start to look into better people that are investing in themselves and make sure that you truly have this right partnership that reflects well of you. And so our job is, again, not only just to connect you, the LO, with the consumer. Our job is to also connect you with all-star agents. And like I said, for all of you guys on this call, this is a great opportunity for you guys to meet people who truly care about their businesses, right? Not the people that are just like, we'll see what happens. We'll see if I'm around, right? Like, I'll just do this on the side and I'll get a secondary job. You want the person who day in, day out, like Jason was mentioning, not the person who's like, I'm not that busy today. Like, I guess I have the day off. Let's go get some cocktails by the pool. Everybody wants to get cocktails by the pool. but it's the person who resists the desire to go get cocktails by the pool or does it afterwards, right? Everybody wants to make sure that you're putting your business at the forefront, and Sold.com is making sure that we're helping you guys get in front of people who actually care about their business and want to take it steps and steps further into just being able to do that. So for LOs and agents that are in our network, how we showcase you is in one of two ways. When we send over a confirmation to an agent saying we have an appointment for you to meet with this consumer, we're going to actually highlight, you can see here, the preferred lender in that specific area. The great thing about our lender program is they are exclusive. And yes, I didn't stutter. I didn't say words that I didn't think I meant. Our lender program is exclusive by county. So there's a lot of mortgage products out there that send leads out to multiple people. Fastest to reply gets it. When you own one of our MSAs, our service markets, you are the only lender that's getting introduced in that area. You are the only lender that's getting showcased there. There's no round robining. There's no impressions. You are the only person there. When our agents are in their dashboard looking at all of their leads, they're also going to see you as the featured lender highlighted there. So you'll get the email introduction, and then we're doing that branding everywhere. So with that, two things before I hand it back to you guys is, if you are somebody who is not in our agent network yet, join our agent network. It's entirely free. I'm linking out two pop-ups. Actually, it's not two pop-ups, it's one pop-up. The pop-up will have it for you guys to learn more. You can click that one link, and depending upon who you are, whether you're an agent or a mortgage professional, you can click on that link and it'll take you directly to the page in which you can create your free profiles. I'm going to put it in the chat as well, if it lets me. And then if you are a LO on this call, you can learn more about how our lender program is working as well. So this is a great opportunity. This content is really awesome just because I think it just gets people thinking outside of yourself, right? It doesn't matter if it's our businesses or our personal lives. Life happens to us all, and we just got it. It's okay to be upset, angry, frustrated by it, but now it's what are we going to continue to do about it? And so I just love hearing you guys all talk about the innovative ways that you guys are staying in front of this, but truly what needs to be done. Everybody needs to step outside of their box. Everybody needs to work harder. And we talk about this with our own internal teams. Sometimes it feels like you're working harder to get the exact same results, but that's the name of the game, right? Sometimes you have to do that, and the market always turns back around. So I will hand it back to you, Dave, Jason, Sosi. Thank you guys so much for the content so far. But this has been really, really great information. And again, for any agent or loan officer who wants to learn more about joining our network, you can click on that link in that pop-up that came up, and then we'll also send it out post-webinar.
Thank you, Deanna. That was fantastic. So guys, if you have last questions, put them in the chat. I'm going to do a minute or less from all three of us on closing thoughts. I'll go last. Jason, why don't you go first? A minute or less closing thought, brother.
I'm very optimistic, and I'm not optimistic. I'm by nature, I try to look things through common sense, but I feel this is going to be really good. I really do. I like what's coming. I wish they would have done it a little bit differently, but I do believe that we're going to be in a good spot. And the other thing is, let's not get blinded by thinking that consumers are living and breathing this every day like we are. They're not. And so as this starts to slowly shift away come next year, like so much of this stuff is just going to kind of be forgotten. What I say is this, when I'm talking about representation agreements, one, I don't know a service out there where you can get a service without signing a document. You can't go to an attorney without signing a fee sheet. You can't go to a CPA. You can't even get a massage without signing documents, right? So why was real estate different? Real estate wasn't different. We just got it signed when we did the contract because people were either lazy or they didn't want to seem intrusive by getting it signed up front. Now we got to get it signed up front. But you know what? Most consumers don't know that. And if you position it the right way of expressing what this is and what it means to them, there's going to be very few people that turn that down if it's presented in the right way. So I'm not afraid of it. I'm embracing it because I think it's going to lead to more stickiness and more transactions, both on the agent side and the LO side.
Well said. Sosi, a minute or less closing thought. Give me a minute. Make sure I get my minute.
So just remember, all of us need help, especially when things are hard. So find your community, right? If you shameless plug, if you want to go to Mortgage with Sosi and hopefully our information inspires you when you're down, awesome. You want to listen to our podcast, awesome. But no matter who you are, if you're in the lending space especially, go subscribe to Dave's YouTube channel. I can't tell you how many times I've been in a funk with business because of things out of my control, and I've watched 1 or 2 of his videos with the top producer, and I'm just, boom, I got this. There's market for me to take up. And so all of us have down days. Surround yourself with a community that levels you up. I mean, even listening to Jason and his vernacular, I'm like, holy crap, like I'm already picking up some new different terminology so I can just sound smarter. So be around good people and you'll see good things happen.
All right, here's my closing thought. And I did put a link to a video that's just a must watch where I interviewed a loan officer, a $100 million producer that gave a lot of tactics and strategies on how to create urgency for buyers in this market. But my closing thought is get better, not bitter. First of all, there's just a lot of adults in life that the older they get, the more bitter they get. And there's a much fewer number of adults in life that the older they get, the better they get, and the better attitude they get. And we're in a market where there's a lot of easy things in America right now that could get us bitter. And I just think it's a great opportunity to professionalize ourselves. If you're a manager or leader, be a better manager and leader. Help your loan officers, help your realtors, build the skills, have the conversations, use the right words, build better value propositions, and let's get better, not bitter. So hopefully you got value today. Deanna, I'll hand it. Well, first of all, Jason, thank you. Sosi, thank you. Appreciate you both making time to do this. And Deanna, I pass it back to you.
Yeah, thank you guys so much. I just put my email address in the chat as well. So if anybody directly wants to reach out with questions, if you are an agent looking to find a stellar LO, reach out to us and we can find you somebody in our network to connect with. If you are an LO who's looking to get more information, again, you can fill out that form and we can call you back, or please feel free to reach out to me. But this was awesome. I think this is such a great way to get a lot of different honest opinions, from some of the best people in this industry. So Dave, Sosi, Jason, I appreciate you taking the time, especially Jason, while you are on vacation. But I guess that also goes to show that even when you're on vacation, you're still working, and you can never fully shut off.
That's the busy work. That's the busy work. And real quick on that, I'm here Hawaiian time. I'm getting up at 4 a.m. and I'm not this go to 4 a.m. and show off at the gym everybody that I woke up at 3:30 type guy. I hate that stuff. But the reality is that I got to work, and so that is the busy work. It's knowing that I got to go to work today and I got to keep working.
Yeah, it's so true. In this industry, you don't really ever truly have time off. You have to keep your mental sanity, but you truly don't have time off. Your clients come first. And I think that was like one of the big takeaways is we held a webinar with Tom Ferry recently, and he talked about, she talked about leading your sales experience with empathy. And I think that's a really big thing is remember where people are. I know that we can get this is something that we desensitize because it's something that we do every single day. But when you are helping somebody buy their first home, it's such an important and memorable piece. And so don't just treat it like this transactional thing. When you're helping somebody with their mortgage, some people have a million bazillion questions and you want to freak out, right? But you just have to remember, like, this is their journey. This is their moment. This is what they're going through. And this is something that's super exciting on their end. And I think if everybody can level up their game, connect themselves with really top tier people in their industry, like everyone's going to come out unscathed and really think back on why did we freak out in the first place. So thank you guys. We will be sending out this recording. I appreciate you guys. I hope to have you on more webinars in the future.
Right on. Thanks for the opportunity. Take care, everybody.
Everybody. Bye.